So the risk management side of trading becomes much more important than even the success side, because you can wipe out all success just with one bad trade. All of the analogies that are in trading books are perfectly valid. A mountain climber, he doesn't have his equipment, his protective equipment, and all he needs to do is, fall once, and he doesn't have that protective equipment, and he's in real trouble. Many years ago, there was a base jumper guy, the people who jump off mountains and they have the rope, and the rope kind of has a stretch to it a little bit, but it catches them, and they get really, really skilled at picking their spots, jumping off of mountains with these ropes, feeling the thrill of the fall and having the rope catch them. And there was a particular guy who was really, really sophisticated at this, really sophisticated. And he was super safe. He checked all of his equipment all of the time and did that for years and had no incidents. One time he had, and they filmed this, and it's unfortunately, it didn't work out for him because he died in this particular incident. And he had left his equipment out at a place in a forest or on a high mountain. I forgot exactly. It had to be pretty high. And it was a week before he came back. So when he came back, he checked the equipment, but it had been outside. It had been, exposed to the elements and something. And he was there just to collect the equipment. He didn't come back he didn't take it down. He didn't get all of his equipment down that he was using. He just left it there, and then he came back for it. And when he came back for it, he was in the mood for a jump. So he hooked himself up and he did the jump, and the rope broke. And after investigating it, the rope broke because it had been left outside in the elements for a week. This was a particularly cold area at night times. The rope got weakened by that. And when he came back, he was super careful, super everything, but he just was in the mood, and he just let it go that one time. And that ended his life. So it's like that with trading and investing. Now, there are people who don't even worry about this. And I've said this before, and I'll say it again, that owning an index fund is a really good way to not have to worry about the stop placement issue. It's a really good way to get gains over a long number of years. I know some of us are old enough where we don't have a long number of years left, but you could have a long number of years ahead of you if you're in your 20s, 30s, 40s, and even 50s, long enough to implement an index fund strategy. The index is typically, including crashes, including wild moves, typically over long numbers of years, makes 7 to 12% a year. And it's passive, meaning that you don't have to do much for that. And you're not using stops. You're not doing anything like that. You're simply buying the index either through a skill set of saying, these are bottoms, I'm only going to buy during big pullbacks, or you simply add to the index fund every, say, 3 months. You just put some money in it. That, I completely approve of that strategy. I think that's a wonderful strategy for people to think about using if they're going to want to invest, because it does work, and it does work over a long number of years, particularly if you're young. That would be a great thing to do. My preferred way for that is to have reflected wave, which would call whether it's a weekly, monthly, quarterly, semi-annual, or yearly bottom, and you would be adding to your positions at those bottoms and doing nothing else in between, waiting for these larger time frame bottoms to come in. And then you just continue to add to your position over years. And it can work out very well. So don't discount that. A lot of us, and I'm definitely in this camp, no, I want to figure it all out. And I want to know that any money that I make, I made because I figured it out, right? There's that kind of mentality, particularly with men. And I include myself in this, but there are other ways to do it that can be very successful, and over a long number of years could really make the difference in your quality of life later in life if you would start an index fund type of strategy. You can read up on it on the internet. The markets are fascinating and very interesting and very fun to trade. but the larger the size that you trade in, the more volatility there tends to be. You just have to just kind of figure that that's going to be the case. There's going to be more volatility the larger your trading size. It's not like a mysterious thing, but people tend to trade larger under certain conditions, and then the volatility is bigger. Volatility meaning for and against your position. It's going to be scarier with larger sizes and so on. So I really like, generally speaking, so people don't burn themselves out and they don't also run themselves into the ground. I really like the idea of just thinking about the markets as a means to helping you from time to time with income, rather than thinking about it as, well, I'm going to make all my money. Because everybody that I know, every man that has ever talked to me who isn't already retired, the main thing that people want to do is quit their job and just trade. But in order to do that, you have to have a real in-depth understanding of the market. If you're really going to be trading the futures markets and doing that consistently, it could take a lifetime's worth of work to really get to that point. Are there people who just, right out of the chute just can trade really well? They have a certain way they look at things. Yes, it does happen. It's really, really rare. But just like in any field, there are people who just are sort of in tune, like frequency radio style. They're just dialed in, and even right out of the box, kind of like a Stevie Wonder with music. He just starts writing beautiful songs right out of the box. That happens with people in every kind of field. There are people who at a very young age just have a real love for medicine or for art or whatever. And they've already achieved sometimes great things at very young ages. For most of the rest of us, and I include myself in that as well, we have a lot of stuff to kind of work through to make sure that, that we're not just going to throw all of our money away, and we have to be very careful with it. There's just in the world that can do this really well, and they do it under different means. Some of them are very fundamental, meaning news-based. Some of them are watching what the government does and knows that, hey, if the government does this, that's going to impact this, and that would impact this, and therefore we should be short this and long that. And they place those positions, and gosh darn, it works out. And then there's other people who just have a knack for the skills of trading and all that. I'm just, so for your information, I was not one of those. The only thing that I apparently came to the market with was an innate visual skill. That's what I brought, and a philosophical bent about the nature of life and therefore the nature of markets. And I've been on the same one since the day I started, which was in May of 1990. And I'm still working and developing those ideas, or those ideas and new ideas that I get. And it's really a lot of fun to get new ideas and ask better questions and so on.